Bell rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Hello, I'm Professor Code. This is the Forex Super Model weekly review for Monday the 16th of the 8th to Friday the 20th of the 8th, 2021. We've written up the week's flows for you to get us underway. We're going to start this as we do the asset classes, the data cycle, and then the final analysis. So here we go then. The week we just talked about, Monday the 16th to Friday the 20th. Euro dollar minus 95. So over that period, the euro dollar as an FX pair lost 95 points or pips. Euro yen minus 105. Euro pound plus 82. Pound dollar minus 237. Pound yen minus 232, and the dollar yen plus 12. If you plug that in to the formula, you get basically a negative opposed driver in the pound at minus 551. Front and back door flows mainly going into the dollar at plus 344, into the yen at plus 325, and the euro is a negative rock at minus 118. Activity plus or minus 669. Right, so we're going to stop it there and then write up the asset classes, so don't go away. Right, welcome back. We've written up the asset classes then. So we've got US dollar index. Basically the dollar index has been pumping higher successively. It's just come off a little bit. It's near the highs, so the dollar is pretty strong at the moment. Gold shouldn't like that and has basically been thumping down and is now 0.45 from the has had recovery, but it's still soft at 0.45 from the floor, just below half marks. Oil's had a pretty rough time, so oil's come right down basically to the lows, so oil's very soft indeed. And Wall Street's been breaking highs and it's now come back to the previous resistance, so, and it's had a drop of about 0.23 from the high, 23% from the modelled high. So Wall Street a little bit soft, S&P similar, 0.17 from the high. The tech a little bit stronger, so the tech has maintained, is pretty much at or near the high. The tech maybe come off 3-4% in model terms. US 10-year then, this is the price of the bond. So we've got the price mainly coming up, so we've got yields being soft, then we had a bit of a yield strength, and now we've got the price coming up again, so and it's 0.33 from the high, so the price has come off about a third, so yields have strengthened up a third from the minimum. Bund slightly different. The price has been coming up likewise, but the yields have not come back so much. So relatively speaking, bund prices are higher than US 10-year, and therefore European yields are softer than US yields at the moment. Copper had that long period of chopping up and down massively on a daily, then it had that big break and then it came right thumping down and lower, and it's now recovered a bit. It's 0.33 from the floor, so it's a third above the floor, but still relatively soft. US steel messing about for a long while, then it broke. Infrastructure probably bill passing in the US, and now it's come back and it's 0.33 from the floor, so it's soft again in a similar manner to copper, just not quite as volatile. Right, so let's have a look at the remember the flows then. So if you look at the week's flows then, which we talked about earlier, you've got the pound negatively driving at minus 551. Front and back door flows mainly going into the dollar, the yen, and the euro was the negative rock. So you've got you've got pound weakness driving, and you've got dollar strength, yen strength, and a bit of euro weakness via the back door. And yesterday, as a day for flows, you had the euro being the opposed positive driver. So the euro was coming up and driving the market. front and back door flows. The pound was still soft, and the dollar was marginally positive, and the yen was marginally negative. Now last week, just to put it in context, remember this week we've had a soft pound. Last week we had a strong yen driving the market. So the yen was the positive opposed driver, and the pound was soft as the negative secondary driver. So last week you had yen strength, pound weakness, and this week we've had pound weakness driving with dollar strength. So that's where we are. Right, we'll stop that there, and then we'll do the data cycle and then wrap it up for some analysis for next week. Right, we're back again. We've written up the data cycles for the week. So China then neutral to positive, the dollar is positive, German is neutral to positive, euro is neutral to negative, yen is neutral to positive, the pound is negative, CAD is positive, AUD is mixed, tier 1 is positive and tier 2 is quite negative. New Zealand dollar positive, and the Swiss franc is neutral to positive. So you've got this strong dollar data cycle still going on. You've got your strength coming into the CAD data cycle, and a little bit of strength still in the New Zealand data cycle, and you've got the pound starting to think about having a negative data cycle as well. So that's where we are. What's going to knock it about initially then? So Monday the 23rd, which is the first trading day of next week, we've got German manufacturing and services PMIs, and we've also got the Eurozone equivalent, and we've got New Zealand retail sales quite late on Monday, and Tuesday is a light tier 2 data day, so that sets us off. We've got the Jackson Hole Summit over the weekend, which is a virtual summit due to the virus, and the main issue to be rubbed out really there is the timing of any potential taper in the US, and the Fed speakers Kaplan Friday yesterday has already rode back hawkish expectations on that, so he's probably setting the scene for the Fed president to row it back, be a little bit more dovish about, and they'll probably blame the uncertainty with the Delta variant. So there you go. That's where we are. So going forward then in the majors, we've got equities that have come off slightly, but are pretty much at the highs, and in some cases they've come off. The dollar likewise is pretty much just sub high. The euro's been sort of fairly static to soft, so neutral to soft, and the pound's been soft. So depending on what's going to happen with the flows next week, the dollar is sort of working on going back up to its recent highs, and the equity market is quite jittery at the moment because it's up there and it's got a few headwinds. It's got this taper issue, inflation in the background, and supply bottlenecks and all the rest of it, and there's a lot of geopolitical risk with Afghanistan floating about, and also we're hearing murmurings of China taking advantage of the situation generally, and maybe having a go at Taiwan. So who knows? That will certainly shake things up. Anyway, so obviously we'll need to see the flows Monday morning, the Asian flows, to make any sort of real assessment. But it looks like, given the where are we? Given the situation with regards the dollar and the yen being on the positive side of the equation, so you've got pound euro on the negative, and you've got yen, dollar on the positive. That's usually viewed as a sort of a risk-off scenario, and arguably we've had a bit of risk-off with commodities and equities, and so if the market wants to go forward, you're going to see a reversal in these flows, because the euro and the pound should attract positive flows, and the yen and the dollar should attract negative flows. So that's where we are. I hope that was useful. Thanks for watching. See you Monday morning for the daily briefing.